Traders, happy Wednesday. Hope you guys had a fantastic day. As always, everything in this presentation is for educational purposes only. All right, we're going to kick off here with the SPY, the S&P ETF, up 1.14%. Volume was but look what it did. The 50-day moving average, the orange line, closed at 293.97. We're at 294.04. We're a whopping 7 cents above the 50-day. Now, that is not enough to qualify, in my opinion, as a clean breakout. If we go to the SPX, which is $SPX and Thinkorswim, we're not above it on the actual index itself either. So if I go back to the SPY, what I'd like to see is also a close above this high. The absolute high was 294.24. I know it's another 20 cents, but if we close above there, you know, as long as volume isn't worse than today, it would be enough for a breakout. I will say this. We are seeing these ever so slight higher lows, and we talked about them before. But at the end of the day, we're still in a box. This thing could easily just roll over and come crashing down. We pop through, all-time highs are the target. All right, let's take a look at the Dow. Diamonds ETF up 0.96%. It did not get up to the orange line yet. Let's take a look at the Qs, up 1.44%. That was a nice pop, but it did not get above the 50-day institutional moving average in orange. And of course, if we go IWM, it still is lagging. And the MDY, it was up 1.22%, but there's the 50-day, here's previous highs, there are the all-time highs. Again, it's still lagging too. Now, I had a question if I go back to the spiders, and it was specifically on the head and shoulders pattern. So what I've done here is just take a snapshot of the S&P so I can draw on it. This up here is the head, this is the left shoulder, and then this forming over here is the right shoulder. Now, ideally, you like necklines like this, and that's not what's happening. Our neckline is like this. So let's go back to the question of, you know, do I use head and shoulder patterns, or what value, what accuracy rate would I put on them? You know what? These patterns work only if, quote, human beings or algorithms are actually paying attention to them. That's the bottom line. There's no one pattern in the market that's always going to work. Just like a moving average, just like, you know, whether it's Ichimoku, Elliott wave, doesn't matter. In a perfect situation, if this low would have come down here, and then I could draw a horizontal neckline, so this would be the neckline right there in orange, that is so visually easy to see that everybody and their brother and their mother who might be a technician or new to technical analysis would see it. And then when you have a fracture below it, it's a lot easier to see, and therefore it ends up coming to fruition. One of those sorts of things. So overall, would I call this a wonderful, beautiful head and shoulders pattern? The answer is a big, fat no. Not a chance. I just talked about it because it's there and I had some questions on it. The neckline here could be on a slant, but then again, you'd be back down here at a low. So no, I'm just saying, hey, it's there, but what am I more, concerned about? I want to pay attention to this box. We break the box on the S&P, and then we have our next new short-term trend, either back up here or coming down here. Then if we break that low, that's what opens up the doors to the December low. So I hope that was helpful, just trying to explain head and shoulders. If I come across a stock that has more of a textbook 101 head and shoulders patterns, I'll talk about it, and then I can show you guys where the neckline would be visually. But this one, not so much. How about SMH, Semiconductor Index? Almost a 3% gain today, but look what it did. It closed above all the previous highs. It took them all out. This is a clean-cut breakout. Volume, not bad. It's not amazing, but 5 million shares isn't too bad. Target, now back up there towards 122, about $7 or so higher. Got a question on Apple, and here's the thing with Apple. I am going to bring in financial.com. And this is the webinar we're going to be having tomorrow. But what I want to focus on is using Financial. You can actually see the dip right there, and you see a dip here. There's 2 periods throughout the entire year that Apple tends to dip. We talked about this last year, and it's exactly what played out. If I move my mouse right to there, between now and October 8th, Apple historically falls by almost 4.5%, 4.49% over the next 5 weeks. This is right after their big product announcement. So 63% of the time it drops. That doesn't mean I need to get all out bearish on Apple, expect the world to end. What I'm saying is Folks that tried to buy in front of the event that Apple typically holds this month, over the next 5 weeks, they haven't made any money. And that's just using the stock's own track record. Quote is our secret weapon. It's just what the data says. It doesn't mean this year the stock can't jump 20% because they're going to unveil, the newest whatever product. But historically, traders are not rewarded walking into that event, just like last year. And I had some folks telling me, hey, oh my goodness, never knew that. Last year literally saved some people's bacon. They were thinking about being short-term bullish, and they just sat and watched and said, wow, it went the other way. This is what I'm going to show you tomorrow. So tomorrow, noon Eastern, 9 a.m. Pacific, I'm going to be showing the top 10 hottest stocks for this month, September. I'll also show you October, and I'll even go into year end. You have to be at the event. You can, if you're watching this on YouTube, you can register at the bottom of the video or register in the email that you received, or maybe a friend forwarded to you. As I do this video, we were well under 100 seats remaining. The room can only hold 500. So folks are going to get locked out between now and tomorrow, but go ahead and grab your seat. I promise you, you will not be disappointed. And as a side note, that event tomorrow, it's very interactive. So if you're wondering if it's some kind of canned presentation, it is not. We're going to be looking at stocks that soar, they crash, doesn't matter what the market's doing. This is typically when they run higher, run lower. And if you've never seen it, it's going to be jaw-dropping because the historical accuracies are off the charts crazy. All right, now let's keep moving on here. Let's take a look at WDC. This is Western Digital. We talked about this stock a little while ago, and today it broke out. So if I bring in a 2-year chart, if you're watching this, watching Western Dig, it cleared those highs. We were right there yesterday, broke out today. Yeah, there's a little gap fill, but hey, that was filled. So where's the next target? The ledge, low 70s. Well, if the stock was at 60 and we go to the mid 70s, we're talking about a 20% move before serious resistance comes in. That's exactly what I'm saying. So that would be the upside technical target. Activision, another stock I told you guys to keep an eye on. Look what it did today. Launched itself nearly 5% higher, pickup in volume. We also had a volume spike here. If you watch what Activision is doing, it's almost doing it very stealthily. This is very interesting. This was the previous high we wanted to get above. We did just a little bit for earnings, but then the market sold off in August, and that pulled Activision down. It then gets back up. It gaps above the previous high. Now we gap and run. We close above another previous high, another previous high. So it's taking out these highs, but sort of a little quietly. The next target is going to be 55. That is only $1.50 higher. That is not much. But at that point, then gap fill time. 62.50 would be the target. And that would be over 10% higher, even at 55 bucks. So keep an eye on Activision, like I've been saying. It is technically bullish on the charts. I would consider a 20-day EMA as an everyday trailing stop. Here is YETI. Remember we talked about YETI? We had this little double top up here, right? And I think the question was actually, what would it take for a trend change to occur? Well, guess what, gang? Isn't that funny? We're seeing it. The volume today, don't get hung up on it's 2.1 million. Get hung up on the idea. Look how high that bar is. It's taking out a lot, almost back to the beginning of August when the sell-off began. Closed above the red line. If it gets above the orange line, the institutional moving average, boom, target up here. Tyson Foods, big down day today. This stock on earnings exploded out of this pennant, descending wedge, descending triangle, shot up. Now we just broke the 20-day. What's most noteworthy if you're following Tyson is the volume. If today's volume was really light, I would say, hey, you got the 50-day and you have this, see what happens. The volume today, the closing at the lows of the day, people wanted to sell this stock and did not want to hold it. I would say at this point, the real big target is probably going to be down here in the upper 70s. I don't know if the 50-day is going to be able to contain it. It always could, of course. Today was big volume. So heads up, the bears are winning. The bulls, you are on notice. And here is Nordstrom's. I want you to keep an eye on this one. I told you guys I have a retail background, and I want to keep an eye on this particular stock. This is more high-end apparel, high-end shopping versus something like Walmart or Target, for instance. But look what's going on here. Here was the carnage. We broke previous ledge support, crashed, then we get a big pop, we pull back, and now we're starting to get up there again. The stock closed at 29.51. The 50-day was 29.41. We closed 10 cents above it. Just like I said with the SPY today, it's not exactly convincing, right? But we now have what's looking like a waterfall type fall. I mean, you could argue this is a bit waterfall. Yeah, the whole trend is, but here it just kept going lower, lower, lower. We started to just throw the stock out 9 ways to Sunday, and now all of a sudden we get a big vicious rebound. It comes back, and now we're starting to get our push again. I'll tell you what, if this stock takes out the 822 close of 30.35, that's only what, 80 cents higher? 30, yeah, about 80 or so cents higher. 30.35. I would put this in the bullish camp. We get above 32.50, then it's gap fill time up in the mid to upper 30s. So keep an eye on JWN. That's it. Hope that was helpful answering some questions on head and shoulders patterns. I don't trade, I don't live and die by them, but when they are symmetrically there, it can be very powerful because, quote, everyone is seeing it. Right now, they're sort of slanted head and shoulders. I really wouldn't even call them head and shoulders. But other than that, keep an eye on some of these stocks. I wish you guys all the best, and hopefully I'll see you at tomorrow's event. Take good care.